Welcome to Trading Lounge and the gold silver report for Friday the 13th of August. So we're looking at the yields here, and I've been looking at this as a wave A up here and all the way down to this box here for the, or rather down at 1 here, major trading level 1 for wave B of C. So we're looking for an A wave, a B wave, and a C wave down here for B, and that C wave will need 5 waves in it. So from the B wave here, we'll count 1, 2, 3, 4, 5 down for this circled 1 here of minute, and 2 here, and then 1 and 2 and 3 and 4 and 5 here for the third wave, an A and a B and a C wave here for the fourth wave to pull back to the 38.2%, which is a bit higher, or the fourth wave of 1 lesser degree here. So this little move up here as wave C, that will need 5 waves in it. So just on the 4-hour chart, and just quickly without going into too much sort of fluff here, we're looking at wave 1 and 2 here, and 1, 2, 3, 4, 1, 2, 3, 4, 5 probably just here. I'll need to just check on that. So we're looking for one more little high here, that something in here that looks a bit corrective in here, so that could pull, that wave 4 could just get a little bit more sort of ugly, but we're not topped yet anyway for that. Okay, so we're not there with the yields just yet. Also with the US dollar index as well. So just DXY. So with this one, I haven't got it on here, but this is wave 3 here, this low. This move here is this is a daily chart up here, daily. This move here is corrective. It's not 5 waves. So whatever happens over here, it's still part of a corrective move, a corrective rally that will eventually take out these lows here and bring us down into 88. We can look at the bigger picture later on. So we're looking for, in fact, I just don't need these showing here, so we can just take those off those. Still getting used to this charting program. So we're looking for an A wave, a B wave, and a C wave here. So we're not quite finished that. So on the 4-hour chart, we're looking at it like this here. So the move up from wave B here to wave C of 4. Here we're counting this top as 3 here and wave 4 here, and then looking for this move up here that's not finished yet. We'll see that's the middle of the trend here, the third of the third. So I may be able to go to the 15-minute chart just on that little trend there and have a bit of a look at this. I haven't seen it for a bit. So from that wave 4 low here, we're looking for wave 1 and 2 here, and then we need to look up here for wave 3, so we've probably got that in there, maybe even one more up, because that would be 1 and 2 here, and 1 and 2, 1, 2, 3, 4, 5, that's the third, oh, that's that bit, and that's it. So it's probably about right, but still we're not finished yet. We still need this little wave 4 and this little wave 5 here for that, and that will make up that wave C there. So another little push higher, that this wave 4 could get a little bit more complicated. I'll have to double check that a little bit later when I've got some time. So this does appear like it's impulsive here, so we can get another move down through here. If that was the case, then we can look at a 38.2% retracement level from wave 2 to here. That would bring us back down into this level here for that. So down at 92.65 sort of area. Alrighty, so that's where those markets are. The gold market, yes, they can be a bigger bearish picture, but we're also looking at this in a triangle pattern here. And also too, it's a bit of a long shot, but as an A wave here, a B wave here, and 1 and 2 here, and 3 here, and 4 here, and 5 here for the C wave, and be finished here and move straight on up from that point. Because if we have a look at silver for a moment, from wave B here down to wave C here, I can count 5 waves. Most of it's okay, but some of it needs a little bit of attention. So wave 1 here with an A and a B and a C wave for wave 2. I'm looking at this being wave 1, but we can clearly see there's 3 waves there. So this wave 2 could go over here as wave 1 here, an A wave here, B wave here, and a C wave over here, but not a very good C wave either, but doable. So there's a bit of an issue with that, but apart from that, we can look at it as 1 and 2, and 1 and 2, and 1, 2, 3, 4, 5, the third wave, fourth wave, and 1, 2, 3, 4, 5. Here, this also gives us a bit of a 3-wave thing here, but I think it's the best fit because this has pulled back up to the 38.2% nicely, and so have these as well. So I think based on the Fibonacci rather than some of the awkward looking structures, I think we're okay at that point. But that would leave us here with wave 5 of C here. So just on the daily chart here for the bigger picture for silver, don't need all of that, of course. So let's just move in here. And my count for silver is that we've got from this big move up through here, we can look at this as the A wave here, and then the A, the B, and the C wave to this point, and then the B wave here, and then the C wave here for the B. So an A wave here, B wave here, and then looking down here for this. So look, yeah, we can just have a look at the tick chart here, maybe 10 ticks, and just drill into the bottom area through here. It's still a bit early to call anything in here. We know with gold, and we'll look at gold in a bit of detail, but this move up in gold we can count as impulsive up through here. So with this here, we wouldn't want to see this market really breach the 61.8% mark at that point. So we're at the 50-60% in here. So I'll just plonk that in here for the time being and give us a bit of a reference point. I haven't really spent much time on all of this, but we'll just keep an eye on it. We'll have a look at gold instead in that terms of that pattern. So here we'll be looking at this as a triangle pattern, a descending triangle. And in this regard, we could look at, in a nutshell, we're looking for, well, an A and a B and a C wave into this space, and then an A and a B and a C here for this, and then moving up from that area there. So we can go in and have a look at this with a bit more detail. So we'll just go to the intraday and move in a bit further and further. So there's our wave D here. Now I don't know if this is true or not. We just got to work through it at this point. Obviously if this low comes out, we've got a bigger bearish picture, and we've got to count for that as well. But at this stage, as an A and a B and a C here for the A wave, then the B wave, and then the C wave up here for the D wave, and then the ABC for the E wave here. So we're going to be here for quite some time. And just drilling in here a little bit further now, just to try to understand this a little bit more. That's the A wave, the B wave, and the C wave there. Yeah, that's not quite topped out yet. We're looking for 5 waves from B to C in that instance, and I think that on the tick chart, I don't know if I'm on 100 or 10 or 20. I'll just have a look on 10, probably on 10. No, I'm on the 100 then. That's okay, I think. Yeah, okay, this will do the trick. Let's just get that in there. So it's also possible, I've got this first move up here as the A wave, but you could have it as wave 1 as well, and then an ABC here for the B wave or wave 2. And then yesterday we were talking about this move up through here. So I'll just get that into line here. So we're looking this move up here, I'm considering it wave A, but it could be a wave 3 as 1 and 2 and 3 up here. But even so, we still need more time here, in that we've got 1 and 2 here, and then we've got 1 and 2 and 3 and 4 here, and then 1 and 2 and 3 and 4 and 5 for the third wave, the ABC for the fourth wave, pulling back to the fourth wave of 1 lesser degree, and then looking for this to move higher up here into wave 5, and then at minimum this would pull back into, if I put this here, then that would be looking at minimum, it could pull back to there in the bullish count in 3 waves, or we need to look at the B wave here, and the B wave would be a little bit different because we would need to take the low in that case, the low there and the high there at 1765 roughly. We'll adjust that. That's the beginning of group 2 area there, and would look for a move lower here into this area through here for that. So back into the 50-60% retracement level as a starting point. It may not move all that way back, but it could. And so I think that, and that would also be in 3 waves as well, if that was going to be the case. So we can look for an A wave probably at the 61.8%. That was the wrong one. So basically stormy waters for a little while in all of this. I mean, obviously it needs to settle after that sort of capitulation or whatever you'd like to call it. And we need to sort of understand it a bit better, you know. Yeah, so let's just see if it holds. You know, if we get this ABC back here, and then this will be the C wave up there for that wave D. Let me just grab one of these. Wave D. Don't need this other one over here. And that will be a C wave over there. So that will just be the D wave at that point. So we've got a lot, you know, I don't know if this triangle pattern is going to pan out, right? We just need to build a case and try to understand what we're looking at here with all of this. So based on my silver count, I think this is suitable as a starting point. Okay, that's all I can sort of say at this point. So down here for some type of probably here and that, and then 5 waves up here for that D. That will be the 50-60% retracement area at that point. Oops, I don't mean to move the box, but it's just that second low there might, you know, carry a little bit of weight, but something of that nature I'm thinking of. So basically just a maelstrom, a storm in a teacup for a little while until the dust settles, I guess. So yeah, I'll just leave it at that, I think. Yeah, I mean the other bearish count, I think I've got there somewhere. Let's just take that back to 200. I think that to so. Yeah, this one's a little bit more lower here. And this really would be just an irregular flat correction. So this is also viable as well. So we just really need to see how this holds up here for this. When you get sharp moves down like that, when you look for wave 4 to pull back to the 38.2%, it can come back to the 50 or the 60. So I've seen it, I've been around long enough to see that kind of stuff before. So it just gets a bit volatile. But yeah, we could look at this as a irregular flat correction at this point, but simply I just like to keep things as simple as possible. I like to keep things 1, 2, 3, 4, 5 and ABC as much as possible, because Elliott's tricky enough as it is, and we don't need to get lost in WXYs and so on and so on, even though that well, I'm not a big favour of the X wave anyway. It wasn't really part of Elliott's original setup, but yeah, so when people add improvements to things, I mean, I'm sure I'm all for improving things, but sometimes they're just used as an excuse to, because they can't they're not sort of philosophical enough to see that something's been pushed out of place, you know. But anyway, we'll leave that at that. That's another discussion. And yeah, so look, I really don't know. That's the bottom line of what's going to pan out. I can just present the patterns, and as we build a case, we will be able to lean one way more than the other. Yeah. Alrighty, I'll leave it at that, and yeah, enjoy the weekend. Cheers.